This is going to be one of the more important videos I think I ever make because it's really hard to grasp, and it took me a long time to really get this as well. So long story short, this is all about the concept of things being overbought or oversold or overvalued and undervalued. And in the first 3 minutes here, I'm just going to quickly try to paint the picture. So new investors, new traders, they have this idea that, okay, this symbol's up 100%, right? In fact, let's actually go back in time and quite literally just watch this in real time. Okay, so this is NVIDIA after the run. Now, a lot of investors after NVIDIA made this run, which by the way, from these lows to here is some 100%, were saying, hey, that's overvalued. So I'm just going to circle this. I can't even tell you how many people said it's overvalued. The headlines are out there, you name it. Well, let's just go ahead and see what happened. Massive gap up. Okay, wow, that's quite the run. All right, let's pause it again. If we do the math again from when they said it was overvalued to this point, it's up another 81%. Well, I can tell you and I can guarantee you that tons of other investors, news headlines, new traders said it's overvalued. Now it's not only just up 100% from the original point they said it was overvalued, but now it's up another 80% from that point. Well, let's just see sort of what happened. Maybe they got it right this time. So time goes on, and so far not so bad, right? It sort of seems like they had quite a chance here. And as time goes on, here we are again. Now they're probably saying it again, it's overvalued. But if you zoom out, price is once again higher than the last time they said it was overvalued, and it's up another 20%. And now you're talking about 3 different overvalued periods, and it just went higher. But let's let this game keep going. I mean, can it really go any higher? It's overvalued. You can hear it all over again. So the point of this video is that these types of things play out all the time in markets. And the market is notorious for being a powerful trending mechanism. But here's the key thing. These symbols and assets trend for a reason, because there is billions of dollars out there moving daily. There are investors all over the world trying to research markets and find the next great win. And really, if you start to understand these types of moves, not as a bad thing, as an overvalued thing, but as a trend that's happening and can continue going, you're going to start to make some better decisions. Like, this is not abnormal. This happens all the time. And what's even better is I can actually show you why it's possible that these trends take place. So a lot of people thought NVIDIA was overvalued. Remember, we have all these points here that are circled, right? You can see circled, remember, walked you through this one, walked you through this one. And now we see its net income over time. So let me move my screen here. These blue dots here represent net income. Well, when they were first saying NVIDIA was overvalued, it was doing $2 billion in net income. That's awesome, by the way, so impressive. $2 billion in net income in 3 months. Wow. Then it was doing $6 billion. Then it was doing $9 billion. Then it was doing $12 billion. $12 billion in net income in 3 months within a year, essentially. They grew their revenue from $2 billion in 2023. Sorry, not revenue, income, net income, profit, from $2 billion in 2023 to $12 billion in 2024. That doesn't happen often. That is remarkable. The trend was correct. In fact, based off of that information, now you can say it was undervalued here. It was undervalued here. It was undervalued here. It may even be undervalued here if this keeps going higher, because that is crazy net income for a company to grow into in that short of time. And that's where the concept of something being overbought or overvalued really does not hold up ever for new traders and investors, because there's usually a reason why that trend is going forward in the first place. Now, I do want to talk about a company that's on the other side of this equation, Rivian. I think a lot of you have heard of Rivian. Rivian is an electric car company. It is down, from its IPO highs, it's down 94% from its IPO highs. Now, a lot of new traders will read that and say, it's in the bargain basement. It's on sale. Now's the time to get in. But remember, if you go to the grocery store and something's on sale, it's on sale for a reason. Maybe the expiration date is nearing. Maybe no one's buying it. Maybe they have too much inventory and need to sell it. Maybe they want people to start eating it or buying it, so they cut the price just to get it in your hands, and they're trying to see if it's actually a sticky product. So when things go on sale, it's actually not really a good thing. And that is a very hard concept for many traders and investors to comprehend. In fact, when things are on sale in markets, it's usually a bad thing. It means no one else wants it. It means there's no real underlying fundamentals to support it to go higher. So it has to go on sale to try to, draw in more buyers. And that is really the cornerstone of this video, which is that the concept of being, let's call it oversold, is widely misunderstood and no one actually knows what that means. Oversold is misunderstood. And so that's for the technical traders out there. Because guess what? Overvalued, or let's say oversold is misunderstood. And now let's say also that overvalued is misunderstood. And the reason why these terms are both misunderstood is because no one understands that the underlying mechanics of the market are, first of all, looking into this at all times. And the market is pricing in all of the information across all of the buyers out there. And it has that symbol at its specific price because that's where it should be based off of its demand, its fundamentals, and really what it's representing at this time. So this applies to both technicals and fundamentals, and we could reverse this, that overbought is misunderstood and undervalued is misunderstood. Because now in this Rivian example, I'm just going to show you quick, it's down 95%. Well, why is it down 95%? Well, we can just do a quick quarterly income look, and we can quickly see they lose over $1 billion every 3 months. So NVIDIA is making now $12 billion every 3 months, and it's just going up and up and up. Rivian is losing $1 billion every 3 months, and it's going down, down, down. So the market is actively pricing these things in. It is not stupid. Things go on sale for a reason. Things go up for a reason. There's no reason to fight that or to think you're smarter than that. However, I am going to demonstrate a way to potentially find some, I'd call it misunderstood valuations in the markets. It's not overbought. It's not oversold. It's not, overvalued. It's just misunderstood. Maybe you know something based on your research that the market's missing. It's entirely publicly available data. It's just you've sort of found something in your research that everyone else is missing. In the Rivian case, I don't really know if that's going to happen because if it's losing $1 billion every 3 quarters, it better have a lot of money in cash to support itself into the future until it's ready to be profitable. But until then, of course, it's going to go sideways or down. It may not even be a company in a few months if it can't raise money, which would mean dilution. So the market is quite smart. And you can see that in November 2021, it went public, crazy IPO. People were loving it. Look at this. By the first earnings report, the game was basically over. They showed that they lost $2.5 billion, and from then on, it was just down. So the market actually was, you could argue, was wrong at the IPO, but right ever since then. Now, I do want to show you one company where I think it does sort of apply to think maybe you can find something that other people are missing. Now, this does lead me to the concept of just because a stock is down 99% does not mean it's a buy. Or flip that around. Just because a stock is up 99% does not mean it's a sell. It's common knowledge to think things are sort of getting too expensive or too cheap, and so they become valuable as a buy, or they should be a short because they're too expensive. But as I've demonstrated, ideally in the NVIDIA example, it simply doesn't work like that because oftentimes the market is pricing in the actual facts, which is $12 billion in net income in 3 months. That could change. NVIDIA could go down, but for the time being, you have to find a way to understand that when things are trending in the market, they trend for a reason. And by the way, just because you're a contrarian investor does not mean you should just blindly go against trends. Do your research and try to understand if it makes sense to go against that trend. A lot of contrarian investors for example, Expensify is down 99%. They will literally just say, well, it's down 99%, so I'm going to buy it. I'm contrarian. Everyone else is selling it, well, I'm going to be the buyer. Well, let's take a look at something really quick. We're going to open up their quarterly revenue. Let's look up their quarterly revenue. They have been shrinking now for over a year. In 2022, they did $43 million in quarterly revenue. In their last quarter, they did $35 million in quarterly revenue. So it's down for a reason because they're shrinking it. So it's actually down 99% for a reason. It does not just mean to buy because it's on sale. It's on sale for a reason. The expiration date might be nearing. Do you want to be the one to buy the expired milk? I don't think so. Same concept. So if you are thinking you're smarter than the market, then you need to find something that shows the market or you or the company's doing something that is going to cause a catalyst to turn this around. Now, generally, the market can spot that because there are researchers, people looking for new announcements, changes in the balance sheet or income statement. But sometimes you, the individual investor, might be able to find that. In Expensify's case, just as an example, I was going through their latest earnings report, and I was pretty interested to see that they finally have got some free cash flow, positive, which means they've got money now to reinvest in their company. They're not just losing money. Yes, their revenue's down, but now they've got money to reinvest in their company. That's kind of an important next step for them. I also noticed that there was some chatter about their debt being reduced greatly, almost, I think, to zero. Let's see. We can see this on one of these slides here. Their debt has just really come down quite a bit. So now they have free cash flow, lower debt, and maybe, as they mentioned in their earnings report, they mentioned that the revenue contraction that I was illustrating here, so see this revenue contraction, may finally be slowing down. So it might go sideways for a while. But they have money to reinvest, so maybe that'll tick it back up. They also say in their earnings report, in fact, actually in the slides here, this would be rather interesting. Let's see, let's get these slides. Give me 1 second. That they're releasing a new product. And that new product is a chat feature for sending money, sharing documents. So this is the visual they show. They're just releasing this chat feature. It's sort of like Venmo meets Slack. So now people can pay for expenses among friends and businesses and do work or collaboration around those expenses. They can literally meet on the chat platform, quickly share money, expense money, track money, and then discuss that. Add tasks around it, work like they're on Slack, but specifically for money. I think what's interesting about that is it's like Venmo for friends, but the Slack component's for business. So now they're doing a total addressable market of friends and businesses. And if you go through their IR slide here, you can actually see, let's see, I saw this interesting stat here. They have 719,000 paid members too. So they're rolling out a whole new chat product that could be viral to 719,000 paid members. Well, maybe this is the type of announcement that gets this turned around. I don't know if it is. None of this is advice. None of this is recommendations. I'm not a financial advisor. I'm just doing education. It's an example, but this is sort of the mindset you have to have. If something's down 99%, it's down for a reason. And if you think it can turn around, you need to know what that catalyst is and know the odds of it actually succeeding. I would say the odds of this chat product succeeding are quite low. So now you're doing a risk-reward calculation. $1.84 is what it trades for. Can this chat product realistically bring it back up to $10? So maybe it takes it back up to 10. Well, that's a pretty good risk reward because now you're talking about potentially a 10x on your investment. But the point of this isn't the risk reward or the money you might make or even Expensify. It's things are down for a reason and up for a reason. You can't just go contrarian or you can't just think something's on sale. You need to go find out why. Apple, of course, is the ultimate example of this. And look at this. I was already practicing for this video demonstration. And what I'm doing here on this Apple chart, and by the way, I'm going to go to a monthly chart because the monthly chart is Apple's whole history. We all know what Apple is today. You can just, well, let me delete this one. You can really get a sense for how many people said Apple was overbought or overvalued over time. Probably here, probably here, probably here, and here, and here. It just over and over again. Over and over again. And the trend is your friend. That's why that saying even exists in the first place. There are so many people researching and following these stocks that the trend is sort of this oscillating wave that just you have to learn to understand, not fight, and really be a part of it. Because it's more likely that everyone following that trend has got the data and insights they need to continue that trend forward than you are to be the one person out of all those people to suddenly spot something that none of those other people saw and actually, you know what, you were right, it's just a zero, it's just downhill from here. Now, I'm not saying that's not possible. There are cases. Look at the financial crisis, the people who got that right. Maybe people who shorted tulip bulbs or the early people to Bitcoin when everyone was saying it was a bubble. It exists, but it's really hard to do. And the first step to being able to do that is to understand why these trends exist and to understand that just because something's overbought doesn't mean it's overbought. There's a reason for it. You need to go find that reason to see if it makes sense. Or if something is oversold, it's on sale, it's down 99%, there's a reason why it's down 99%. I've now shown you 2 examples in Rivian and Expensify. But that's not to say if you do your research that maybe you can find something the market's missing. So with that being said, that is sort of the end of this video. I just wanted to address these topics that are so controversial. New traders, new investors never understand it. I hope I can just help a few people out there. That's why I make these videos. And I hope you all are enjoying my channel. Please make sure you subscribe. All right, I'll see you later.